welcome to another episode of Politrickkks As Usual podcast. Today I got Sherranda, the realtor, about time, long time coming, and she's here today to tell y'all everything about home buying, the benefits, some of the obstacles, and whatever she knows about home buying. But welcome to the show, Sherranda. How you doing today?
Nice. Good.
All right, so
trying to keep cool. It's hot.
It is hot. But I'm glad you came. Thank you for coming down today.
Thanks for the opportunity, Mike.
I want to first start with just a little bit about yourself, where you're from, your upbringing, and things like that.
All right. Well, I'm from Stamford, Connecticut. Born and raised, pretty much. So, these are my stomping grounds. Know these streets in and out. And currently I live in Norwalk, so I'm very familiar with Norwalk as well. I do a lot of business in Fairfield County. But I'm also licensed in New York as well as Connecticut.
Oh, okay.
So I've been doing real estate for a few years now. And I also, work as a finance controller, for not-for-profit industry. So I kind of know home ownership from both sides.
So you're going to definitely have to tell me about a finance controller, because I have no idea what that is. So we'll get into what that is. But my first question to you is, did you grow up in a house or did you grow up renting?
I grew up as a young girl in an apartment on the South End.
Okay.
And so my mom was a renter.
Okay. So same for me. We grew up renting. And I just want to know, what made you want to lean into real estate as a profession? Was it something that just was innately wanting to help people, or did you just see the opportunity career-wise, or what made you do real estate?
So it's kind of funny. Two of my friends played a major factor. One of my best friends, her mother would always tell me every time I came to their house, when are you going to buy? When are you going to buy? And my response was to her, I don't want to buy, because why am I going to be all this debt? And eventually one day I'm going to die and I'm never going to be able to pay it off. Then somewhere down the road, I became a mom, right? And that changed my whole outlook on life. So what happened was I was renting and I kind of toyed around with the idea. I think one year I was just fooling around and I went down to Stanford HDF, which is a First Time Homebuyer program.
So let me just jump in there. My mother used to work at HDF, Housing Development Fund.
Yes.
Okay.
Okay. So actually my mom told me that. Because my mom told me a few weeks ago when she was with your sister that your mom taught a class that she attended.
She did. I'll tell you about that.
Yeah, so small world.
That's funny.
So I went to HDF. I don't know. At this time, my son was pretty young. I went down there and I was just like, hey, what do I need to do to qualify for this program? So I submitted all my credit documents, probably my W-2s. They sent me back a letter with probably 10 things on this letter that I need to do to prepare for home ownership, as far as my credit, paying things off, the amount of money that I need to have in reserves. And I took that letter and I stashed it away. Probably didn't pay any attention to it, but it was all in the back of my mind what I needed to do. So fast forward probably about 5 or 7 years later, my son was getting older at this time, and one of my closest friends, she was a realtor. And I told her I wanted to buy. I went and I got a pre-approval. I think at this time it was maybe Citibank. Went and got a pre-approval from Citibank. Took that back to HDF, because by that time I had cleared up the whole laundry list. It was in the back of my mind, just kind of like a maybe, and also being financially responsible, with my credit. Took it down to the bank, got pre-approved for a loan, and brought it back to my friend who was a realtor. And she was very instrumental in making my home buying process easy. I showed up to her one day with my pre-approval and she was like, oh, you serious? Right. So she took me out and we went looking at several properties, and I became a homeowner. And at that time, I used the HDF program and I bought my condo and I had to put 1% down. And that check was $2,300.
Wow.
That I had to write to become a homeowner.
Wow. So one of the things, again, I told you my mom used to work at HDF, and she used to always tell me, at this time I'm in the streets though. Mm-hmm. And so she don't really she kind of know, but she kind of don't know. And I'm working too. And she's always telling me to buy. And she's like, Mike, if you're going to buy, don't buy no car. Cause I'm like, yo, I want to get a Benz. You know, I'm in the street. She's like, don't get no car, stupid. Like, it's going to mess up your, is it debt to income ratio?
Yes, yep.
So she's like, yo, it's going to mess up your chances of getting approved for a crib.
Mm-hmm.
And so I was going through some of the classes, but it never got to manifest itself because I went away. But she was always telling me two things. One, don't buy a car if you're trying to buy something. And two, they're not buying more land. I mean, they're not making more land. So she would always stress the importance of ownership. Like, yo, they're not making no more land. Like, buy land, buy a crib, buy whatever you can buy. And I still haven't arrived there yet, but I will. When I do.
You definitely will.
I will.
You definitely will.
For sure. Okay, that's cool. So let's talk about, you said you wrote a check for $2,300 to buy a home. I don't think people really know that.
So that was, I think, 2017 at the time. And I brought in East Norwalk, on the borderline of East Norwalk and Westport.
Yeah. Because most times, like, I texted you the other day about me getting an apartment. And I started thinking to myself, like, if I'm going to save up money to move into an apartment, what's that, first month, last month, security? I mean, especially today with the rent being $2,000 and $3,000 for a one bedroom around here is crazy. The rent is crazy.
Right.
What am I looking at to move into an apartment if I wanted to just rent?
So, and I teach this at my seminars, right? So they want 2 months security and first month's rent. Okay. So that's already 3 months. And then if you're looking mainly in Stanford and Norwalk, they want good credit. Okay. They also run a background check, and then the background check, what comes back is your credit history, eviction history, and criminal history. And you said if the place is $3,000, you need $9,000, and you need to have good credit and good background check.
So essentially, first of all, that's a whole nother conversation about criminal history affecting renting. Because I have a criminal history, and I know that it affects us. And that's something I'm putting together in a panel separately. But $9,000, if I have $9,000 in good credit, at that point, shouldn't I just look to buy?
Absolutely. I mean, I tell people that all the time.
And so
all the time. When the same $9,000 that you're going to use to put down, same $9,000 I can get you into a house.
Right. So when you present that to someone, what is the objection or obstacle that they have? Why wouldn't somebody say, okay, Sherranda, makes sense. Let's do that. What are you running into as far as objections?
Fear.
Fear of what though?
Fear. That's a good question. You got to ask them. Fear of the unknown. But the way I looked at it and broke it down for myself is, if I can pay this landlord on time, why can't I pay my mortgage on time?
Right.
If I've been renting for 10, 15, 20 years and I'm able to pay that rent on time, never had any issues, why would it be any different just when I eliminate the landlord and I'm paying a mortgage?
Right.
So that's how people have to look at it. But a lot of times it's fear. And
before, rent wasn't even reported as on credit before. And I think now it's starting to be,
in some cases,
now reported on your credit. But that rent payment essentially, most times, is not even reported on your credit as a positive payment. So it's really not doing you much good. But it's weird that it's fear because, again, like, you are making the payments anyway. And typically you're paying, if you're renting from a private landlord, you're paying the mortgage plus a premium profit. You're paying profits plus a mortgage. So you could afford the mortgage.
But just like I told you, when I was growing up, and my friend mom, she would ask me all the time, why don't you buy? Why don't you buy? And I was like, I ain't buying. Lack of education. Right. At that point in time in my life, I had no education nor mentor, nobody to show me the way, until eventually later on in life, I stepped out on faith, on my own, and figured out, all I gotta do is write this check for $2,300?
Crazy. That is crazy. What type of credit does someone have to have in order to qualify for some of these programs? And tell us about some of the programs that are available out there.
So it all depends. Okay. In some cases, some lenders can get you in a home with a credit score as low as 580. Okay. Your interest rate may be different from somebody else that has a credit score of 640, 650, 700, but the lowest score that they can work with is a 580.
Okay? I did not think a 580 could get you into no credit. That's low. Yes. I mean, that's pretty low.
Yes, yeah. It is doable. 620 is even good. Sometimes you may want to work with somebody to get your credit higher so that you can get a better rate, which is beneficial. But it's various factors that go into play. You could have a 580 credit score, but you could have 6 months into reserves, saved up to help, kind of like offset it. So different lenders look for different things. Now, to qualify for the program, each program, has different criteria. So every program is different. To start off with HDF, which the program I use, to me, I felt like they scrutinize things a little bit more to get you prepared. They do want a certain amount in reserves, and there's other first-time homebuyer programs that do not. But for that program, they actually have 3 that I know of. Okay. One is called the Smart Move, where I think they help you with, probably about like 25,000 down and then another 3% towards your closing costs.
So down payment assistance?
So it's down payment assistance they call that the Smart Move. They also have a program called Live Where You Work. So if you work in Stanford and want to buy in Stanford, there's programs, I forget what they give you, but you can also get a grant or whatever with them for the Live Where You Work program. And I guess that is to promote home ownership in Stanford, Norwalk, or whatever. But as far as I know, the Live Where You Work program is in Stanford. They do have another program. I forget the name of that one, but off the top of my head, I want to say there definitely is a minimum of 3 programs. They may have more. The person will have to go and look into them. But the ones that I mainly work with are up to $25,000 down, which is the time to own program. A lot of people are utilizing that program now. And that's how I'm able to get a lot of people into homes. Okay. So with that program, I think you have to be a Connecticut resident for a certain amount of years. So they'll look back at your tax returns. There's income limits. And I believe with HDF, there's definitely income limits for that program. So different counties have different income limits. So I work a lot with the Smart Move and also DAP. DAP is a program where I don't think you have to be a Connecticut resident for like a certain amount of time, but a lot of people that get denied for the time to own program can utilize DAP. And I think that's like 10 to 15,000, but I think there's like percentages depending on your income, the property that you're buying or whatever, to how they get their criteria for what you qualify for.
Right. So just to expound on like down payment assistance, in what cases would that be relevant? Like, because you still have to have your own savings, you still have to have your own money for down payment, right? You can't come into it with $0 and down payment assistance is going to fill the gap, right? Up to 25K. It's not like that, right? Or is it?
So everybody's case is different. You cannot base your case, your financial circumstances off of what Susie Q did. Every case is different. Income's different. Credit's different. What you're trying to buy is different. The amount of reserves that you have is different. Things that could also, qualify you as like if you have a whole life insurance policy that can help you out as part of money in reserves. If you have retirement fund, that can help you out as money in reserves. So everything's different. Like I've gotten people into homes with as low as $3,000, like a whole house.
Wow.
And then I've gotten some people in homes with quite a bit more. So it depends. It really depends.
What is the qualifier? And I asked you this the other day, like as far as a loan, a mortgage, what I can get approved for? How is that determined, the amount of money I'm able to get approved for? Is it based off of a certain X times my income or?
So, yeah. And then, what you asked me, is it 3 times your income, right?
Uh-huh.
A few things go into play. It's your income and the amount of debt that you have, right? Because I could be making 50 grand a year. You could be making 50 grand a year, but I could make 50 grand a year and I could have $2,000 a month worth of credit card debt and,
and that's that debt to income ratio I was talking about.
Debt to income ratio. Right. We both make the same amount, but you'll be qualified more than me because I have more other financial obligations that are hitting my monthly credit to take away from my affordability.
Right. And so I know in this market, I'm hearing that this is like one of the hotter markets, Fairfield County. I mean, it's not whole lot of inventory. Is that not true? I'm hearing there's just not a lot of inventory here in this market. I know after COVID, I mean, we had like this mass exodus of people coming into this place and it seems so crowded. I guess what I'm asking is it much harder for a single person to qualify for something right now, or do you kind of have to combine incomes or make a lot of money in order to buy something right now?
Well, a lot of my buyers, I think when I look back, people are qualifying more so as singles. Um, it doesn't matter. If you have two people that can do it together, that's great. But keep in mind, when we're using these programs, there's also income limits. So that's what also deters people from, a couple doing it together versus one person doing it or them doing it individually, like you try and I try, so that's what really makes a difference. That income,
Okay.
cap.
Then I hear too about like couples. You say couples coming in together, right? I hear people say like, if you're a couple, that maybe we shouldn't do it together because you qualify for the first time home buyer maybe once, or like what is the criteria to qualify for first time home buyer program? And is it more advantageous to do it? It's like we get two properties, I use mine essentially, then you use yours, like, or does it affect us if we come together at one time and both use the first time home buyer together?
It depends on the type of first time home buyer program that you're using.
Okay.
Because everybody has different criterias. But as far as I go, my advice would be like everything's going up,
Right.
right? Gas is going up. A few months ago when the gas prices were really high, it took $90 to fill my take up, right? So my advice would be, in order to get ahead, you want to leave more behind for your children. You don't want to have to work as hard, when you get to a certain age. I would say for a couple, buy individually and then together get something later on.
And correct me if I'm wrong. I think that, let's say I'm buying like a multifamily or something with rental income. Can that also help me qualify for more money because I can count that income? Is that true?
Who you been talking to? Because you ain't asked me that question.
See, my mother, I told you. She planted these seeds.
I'm cool with that. As long as you ain't.
She planted these seeds in 2007.
Yes.
So she was telling me different things and strategies to try to buy because she wanted me to buy. But again, I didn't have a chance to do that. So.
But absolutely. Well, you haven't had the chance yet, right?
Right. Not yet.
So, right. Because we're speaking into existence.
That's right.
So, yes. If you are buying a multifamily and say you're going to live in one unit and rent the other one out, the income from the unit that you'll be renting out does help you qualify towards purchasing that home, towards that mortgage.
Okay. So again, I told you I did a little research, and I know that the national average for home ownership is like 65%. Non-black and whites, they're about 77% of home ownership. We're about 44 to 45% home ownership. What are you doing, or what programs are available? What do you see is happening to try to maybe bridge that gap and close that gap a little more? I mean, back in the day, there was like redlining and different discriminatory practices, not really lending to us the same. Are you seeing any of that still, or are we getting a fair shake at being funded and financed to buy homes?
Well, there's different laws in place now.
Right.
So there's fair housing laws.
Mm-hmm.
Fair housing laws protect you when you're renting. Fair housing laws protect you when you're buying.
Mm-hmm.
Right? So you can no longer discriminate. You can't discriminate off of race. You can't discriminate off of religion. You can't discriminate off of somebody's family size. You can't
or zip code, right? You can't
based off of handicaps, right, or different things like that as far as the fair housing laws. And then you asked a few questions there because you also asked, what am I doing,
Mm-hmm.
to help with that? I do first time home buyer seminars. I provide the education because, like I said, I had nobody to tell me.
Right.
If I would have known that I could purchase a home with 1% down in the programs, I probably would have been listening to my friend's mother a very long time ago.
Right.
My house would have been paid off by now because she was asking me that when I was in my early 20s.
Right.
So I think for us in our community, it's the lack of education, right? And then sometimes you have to see other people doing it to think I can do it too.
For sure.
So I think a lot of my business comes from showing people in our communities that it is possible. A lot of people that I work with know somebody that knows somebody that knows somebody. So when, my clients allow me to post it on social media and to share that they just purchased a home, it motivates other people.
For sure.
And then they're thinking, well, if such and such could do it, so can I. And I really didn't have that growing up.
Right.
I probably had like maybe one friend that was purchasing a home versus now a lot of people are doing it,
Right.
but times were different back then.
And I know that to be true for certain. I won't say their names, but there was a person I sent you. They were looking to rent. So when they saw me, they're like, yo, do you know anybody renting like a private landlord? Because they have some things on their credit, things that, that they thought they couldn't really get anywhere to rent. And I'm like, well, I know somebody, and I linked them with you, and you end up selling them a house. So I know for sure that that seed might not necessarily have been in their mind before they got to you, because when they talked to me about it, it was about renting something. And when I seen the final product, I'm like, you sold up my crib is crazy, but that's beautiful, and I'm glad that happened that way. But yeah, I know they weren't thinking about buying nothing at that time, because
and that's actually a dope story because, like you said, they were having a hard time finding a rental, and that they felt that their chances would be better with a private landlord, right? And it's so dope because right now they don't have to deal with a landlord.
I know.
And if in the future, if they choose to rent that property out, they are the landlord. So that also breaks down, some barriers for people, whatever challenges they had, they no longer have those challenges.
Right.
Which is great. Now that was one of the transactions or success stories that I can say that really makes me feel that what I'm doing like pays off in the long run, right? Like that made me feel really, really great about being in a position to educate someone else. I was really satisfied with that, and I'm happy that God's put me in a position where I'm able to help other people.
Right.
Right. And then you did mention redlining. So a lot of people don't know what that is, right? So redlining came about like in the 1930s, where lenders and insurance companies actually had a map. And on the map, they would draw a red line around the areas where people like us lived in. And they would say that these are areas that they didn't want to lend money to people to go buy in, because they felt that those areas, weren't worthy of them investing, mortgage loans or insurance for people to purchase in those areas. So at that time, they weren't really ready for people to buy or support home ownership in our type of neighborhoods.
Right.
There also was another effect like back then where it's called blockbusting. And what they would do is, agents or whoever would go into these people's homes that did own, and they would be like, oh, such and such, people of a certain ethnicity are going to be moving in this neighborhood soon. So you need to hurry up and sell your property because the values are going to go down once such and such start moving in this neighborhood. So you need to sell right now, sell immediately. And they would send these people into a panic into selling their homes.
Wow. Okay. That I didn't really know much about, but I know you mentioned when we talked earlier about blockbusting. I'm like, what is blockbusting? But that's crazy. So many different tactics to just manipulate the market. You know what I mean?
Yes.
The part of the reason this podcast exists is, like you said, similar to what you said earlier about just being in positions to try to educate the people on a lot of things that they just don't know about. And so that's why I try to get people on like yourself that have the education and the skill set to just teach people that it is possible. Because I think that if we knew that, again, 2,300 or what'd you say could get you into a home, I think that you would more than likely explore the opportunity to do so. And a 580 credit score, I mean, that's people buying cars with you know what I mean? They'll go buy a car like with a credit score like that and put $5,000-$6,000 down, and you could have got a crib.
Yeah. Like I said, lack of education.
Yeah.
Lack of education, fear, and it's time like to step out of fear, right? It's time to step out on faith. Like that's just what it is. A fear is a tactic of the enemy to hold you back.
Okay, now you preaching. I was gonna speak to that too, about faith versus fear, right? Because I tell every single person on the other side of fear is a promise. And it's like we get all of these things, and I just posted about this the other day. We get all of these thoughts about why it won't work, why it won't go right. But that's really just a trick. And like if you just took the shot, let Sherranda tell you no. Like let her say it don't work. But try first, reach out first, see where you're at, see how you can maybe get there if you're not there today. Because even if you're not in shape today, that doesn't mean you can't get in shape. That doesn't mean you can't get to the place that you need to be to purchase. I think it makes sense to just reach out, find out where you are, and start a plan to work towards what you want. But fear is designed to stop you from getting what you need to have in this world.
And I was transparent with you about that. I said,
Yeah.
when I went down to HDF, I didn't know what the hell was going on. I was just like, hey, tell me what I need to do, you
Right.
know? And it just so happened, it was like 6-7 years later, I had that in the back of my head. And then one day I was like, okay, it's time now.
Right.
You know, I was renting an apartment on Seaside Avenue at Exit 9. A lot of things in my unit were outdated. The landlord kept going up on the rent every year. And I was like, what? Like this is a nice little condo here, but bro, you ain't updating nothing.
Right.
And you just flexing on me every year trying to go up on my rent. Like, okay. So, yeah, it was time to make that move.
So two things. One, when I started this podcast, I didn't know how to use a camera. Like we just talk about faith, right? I just had something put on me, say, do a podcast. I did not know how to use a camera at all. Now I got 3 cameras in here. And I got my own little setup going, but it was just leaps of faith that I started taking, right? And so even in real estate, right? I'm sure when you first started your real estate journey, how long did it take you to sell something? And how did that feel for you just in the beginning? You know what I mean? Maybe when you weren't selling something right away. I know now I always see you posting like you hot right now. But in the beginning, what was that like?
In the beginning, it actually was tough.
Yeah.
People think that real estate is easy, right? A lot of things come with this game. Especially when you get to a certain point in your career. A lot of things go on the back burner because, you know, you're providing a service to your clients. So, your, different things that you can do with your time, your flexibility to your family, your kids, all of that changes. But when I first started out, I think it probably, I don't know, before I sold my first property, I'm trying to remember who my first deal was and I can't remember.
Mhm.
And I feel really bad about that.
But that's okay. Well, let me ask you this then. Do you remember feeling discouraged at all? Do you remember feeling like this might not be for me?
I do remember how long it took me.
Okay.
So I think I sat on my license maybe I think it probably was a year or over a year before I sold my first home. Maybe I did my first rental within 6-7 months of being in the game. But even that was challenging because you work with different types of people, right? Some people have more education than others. You know, you got to work with different type of personalities. Early in my career, I was working with a landlord and, he was a little bit of a difficult landlord for me to find tenants for. And, I was discouraged. And that was like probably one of my first or second transactions. And the transaction went so bad that, I think I was so traumatized. I went home crying and I was like, I'm not doing this anymore. I quit.
Wow.
So this is definitely not a game for the weak hearted. You definitely have to be a people's person. It takes a lot of patience. And you have to know how to maneuver around things. There's going to be plenty of obstacles that come your way. You have to be able to think outside the box and just keep it moving and not let that get you down.
One thing I hear one obstacle I hear about people purchasing a home, they always talk about like repairs. Like they don't want to be responsible for like the upkeep of a house or a property because, you know, when you rent, that's kind of taken care of through like the building or whatever. What do you say to that? How do you overcome that obstacle when someone's like, you know, I don't want to be responsible for a water heater that breaks or something like that? I mean, does it still make more sense to buy, you know?
Lack of education again.
Right.
Okay. So I had this conversation with my son and I was explaining to him, about equity. We were driving yesterday, to go shopping. And just like your mom, I was trying to educate this young man and I was explaining to him, I'm going to get to your answer, but I was explaining to him about equity, right? So, I was using this situation, and I was using myself honestly as an example. So when I bought my place for $203,000, right? And now it's worth $368, and I bought it in 2017.
Wow.
Right? So eventually, at some point, I would like to rent it out. Okay. And I will be renting it out for the fair market value of what the other condos are going for in my area. Okay. That fair market value is probably about 2,600. Okay. So, when I rent it out, let's just say for the 2,600, it's going to cover my mortgage, and I'm going to walk away with a nice amount aside for myself. Right? And that money that I'm setting aside, I'm going to be a smart homeowner, and I'm going to set it aside and save it, because while my tenant's in that place, if they ever need repairs, I need that money on hand to go in and replace whatever it is I need to replace. Right? Okay. So I'm saving this money every month for the repairs. Now figure, I already have 2 months security deposit from you. So if you do any major damages, it's coming out of your security deposit. Right? If you decide you want to go in there and kick down walls and do all type of wild shit, okay, all right, you know you got that security deposit money I'm holding for you, right? This got to come out of that. But if it's regular maintenance and wear and tear in the house, I'm going to repair it. Probably what I saved off of 1 month of your rental payment, I can probably go in there and do the repairs with. Right? The other 11 months in your lease, I'm probably stacking that money. You're not going to do that much damage in your place, right? Because you want to live in a nice place, and you're going to take care of where you live. So you're not going to be in there, doing major damages, basically. All right? So to answer your question, I still saved a ton of money, and I only use a little bit of money for repairs. So that person that's saying that, I don't want to do the repairs, so you rather pay me a good amount of money, probably over $1,000 a month that I can pocket. So at the end of the year, I'm going to have 12 grand, and you probably only needed like $1,000 in repairs in your place.
Right. That makes sense.
So that's a lack of education, right? Now, the other thing is that I was explaining to my son about the home equity, right? Where now my home is worth more, right? Because I've been in there for 17 years. You, as the renter, you don't have anything that you were saving for you. You built no equity. Your landlord built equity, but you did not.
Kind of like leasing a car, kind of. Not really, but because a car is a depreciating asset, but just saying,
yes,
you're paying for it, but you never own it,
Right. And now the landlord's building equity and you're not. So in my home, like I said, I bought it for the 203s worth of 368. I can actually go and take out a home equity loan. Let me pull out 200,000. Right. Now I have the option to do that because I have all this equity in my place,
which you can use for whatever you want, or purchasing another property, or fixing that property, or whatever you want to do with it.
Yes. I can even use it right now to pay for my son's education while he's in school. However I choose to use it.
No, that's cool.
And everybody that's stuck in that mindset of still renting and being in their comfort zone, you can't go in the bank and say, hey, let me borrow, let me pull out a cool 200 or, let me pull out a cool 50.
So is real estate still one of the pillars of like generational wealth building and things like that? Do you still look at real estate as one of those things that, like a foundational thing that everyone should have in a portfolio, of assets?
Absolutely.
Yeah.
Absolutely. Even if you purchased this year and decided you wanted to sell it in 2 years. I was talking to a client yesterday. They were interested in going to see a property. And so I went on the MLS. I'm looking at this property and I'm like, I recognize this house. It was just on the market. Like I was just at their open house recently. So I went and looked at the property history. I was at that open house 2 years ago. And 2 years ago, the house was priced, and this was in Derby, for $245. Right now, it's on the market for $360. 2 years. But that's something that home equity is something that I'm trying to teach my child, because I'm trying to get in his mind, or just people in general, when I hold my seminars, just to get in their mind, renting it's like in some aspects, it's great. It works for the position that people are in, in life, but you don't want to stay stagnant. You don't want to stay stuck there.
Right.
You do want to grow from that. So, I'm trying to teach my kid that as soon as possible, the name of the game is to buy and not rent. Because at the end of the day,
I don't think he got a choice with you. I don't think he gonna have much of a choice. This kid gotta have it. Yeah, I don't think he got much of a choice.
Yeah.
Question for you about equity and just property value. What are some of the improvements or some of the things you can make into your property to raise the value of a property? Or what things determine the value of a property, or how can you increase that?
So one thing that mainly determines the value of the property is your neighborhood and what the other properties are going for in your neighborhood. That is how we as realtors use comps to determine the value of your home. A similar home in the neighborhood, same square footage as yours, same amount of bedrooms, bathrooms, same type of layout, whatever, just sold for $240. So, that's probably what I'm going to be able to get yours for.
Right.
And the banks also use that type of comp. This is me breaking it down like in simple terms, that type of comparable when they come out to do home appraisals as well. Things that raise the value will be like the quality of the materials used. Some people can go in and they can get the cheapest materials at Home Depot and it still looks nice, but the material's cheap. Like I'm going to go in, I'm going to know that. Like I'm going to know that somebody went to Home Depot and like used the cheapest that they could find. Versus, so it's also the quality of materials, the more value that you add to your kitchen and bathroom.
Okay.
Would bring you a great investment. Is
that like via like appliances or something like that? What do you mean like
appliances, the type of countertops you use, the cabinets, your sink, things like that. Okay. And the same thing in the bathroom as well. That's what the starting points that you do want to start at to raise the value on your home.
Okay. And if someone sells for a low amount, that hurts you too, right? If somebody next to you takes like a low ball number, that kind of can hurt the overall value.
But they will also take into consideration, so say that low ball offer, right? It's to say your home was like way outdated and my home has more updates. They're going to consider that. Okay. Also.
Okay. So you want to touch on something, and this is true too about education, period, about men versus women and black men versus black women and home ownership rates or different things like that. What are you seeing as far as those statistics in home ownership, men versus women?
Well, it also is based off the age demographics, right? Mm-hmm. So I think in the group of like 25 to like 30, younger men are leading in purchasing homes compared to women. But in the older age group, like in the 60s, more females are homeowners. And just for me in general, and I was just having this conversation with someone, and I said, I feel like a lot of my clients are men. A lot of black men in the communities are purchasing homes. And I would like to see more women purchase the homes. But you do have to think about it. Some women have more responsibilities, right? Right. When the relationship breaks up, they're the ones at home, financially probably taking more care of the children or whatever the case may be. But a lot of my clients are young men.
Well, at least we did it somewhere. Y'all killing us in education.
Yeah, but I'm gonna assume it's because a lot of us are mothers. We have different responsibilities. But listen, any women watching, come to a seminar. Like, let's start somewhere.
When are the seminars? Like, tell us about when the seminars are, how often they take place.
So lately, I've been doing them once a month at the Norwalk Library. The next seminar is going to be Tuesday, August 25th. This is the 25th or 26th, but it's the last Tuesday of this month at 6:00 at the main library in Norwalk, and I believe that's 1 Belden Avenue.
Okay.
So there's a link in my Instagram bio, or people can call me, text me.
And what's your Instagram page?
My Instagram page is Randa the Realtor. On Facebook, it's Sherranda Harris. But even if somebody was to call me, my number is 203-613-2665. Call me, text me, and I can send you the link there. And you don't even have to be ready. Right. Like I said, I wasn't ready. Yeah. It's just coming to get the education so you could start, you know? And even if you do apply, and for some reason the lender comes back, and he's going to say, okay, well, I looked at your credit. This is what you're going to need to do. I'm going to give you a roadmap, A, B, C, D. You work on this, you come back, you see me in 6 months, you'll be in a better position, right? But here's the thing. You don't know unless you try.
Right. I think that's important, again, to say, because most people feel like they got to be ready. And I always tell people, just start. Like, you don't know. Let them tell you what you need. You know, don't be embarrassed, none of that stuff, because you won't know what you need to fix. You go sit down with somebody. Because you don't know this industry.
You don't know.
You know? You don't know what you don't know. You don't know what's available. So I tell anyone, just get out there, see if it's even possible, and then take it from there rather than counting yourself out.
I had one person tell me, I can't buy because of my credit. Matter of fact, if you find me a house and you give me a home, I'll buy you a house. Still waiting for that lady to buy me my house to this day, you know? There's people that come in, I'm not ready, I think I need such and such, and that's not the case. They actually aren't ready. They already in the best position to be in as possible. Like, you just never know. Like, why shoot yourself down before you even give yourself a shot? Right.
Okay. Well, I think we gave them enough. Anything else you want to add to this or let people know about before we wrap this here up?
I would just say attend the seminar.
Yeah.
You know, it doesn't hurt. Bring a friend. Yeah.
All right. Well, thank you for coming. We finally got this done. Thank you for coming.
Right?
And we'll put it out. Hopefully people get something from this.
All right. Thank you. Appreciate it.
Oh, wait. Last thing. This was not planned. You wore the merch, so I appreciate that. Thank you for that.
I can't come on here and, not rock my shirt.
Super dope. All right. Well, listen. Thank you.